Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news the Aussie housing market is still in its rough patch. But first, official analysis of the first quarter GDP result shows American consumer spending increased by the most in more than 9 years. Real personal income was up at an annual rate of 2.3% in March, while consumption spending was up 2.9%. Although the White House says it wants a rate cut, it is hard to see one when growth is good and inflation low. The market is now waiting for Thursday's Fed decisions. Meanwhile, the latest regional Fed survey comes from Dallas, and their factory index came in quite poor, mirroring the many other similar surveys. None of this is worrying Wall Street, however. The S&P 500 is currently at a new record high, up another 0.3% so far today, and taking the 2019 gain to 17%. Overnight, European markets rose about 0.2%, while yesterday Shanghai was down 0.8%, Tokyo was down 0.2%, and Hong Kong was up almost 1%. The OECD is reporting that while employment is rising in member countries, most jobs continue to be created in relatively low productivity, low wage activities. In Europe, business sentiment is on track and has been dropping steadily since the beginning of 2018. It is now close to going negative, which it lasted in 2013. This latest survey data comes after consumer sentiment survey, which is already negative, also failed to fire. In Australia, the resetting of their housing markets is generating some interesting headlines. In Sydney, prices are down almost 15% from their peak, and the city's median house price is set to fall below $1 million. In Melbourne, which is the country's biggest new build land market, a year ago the cancellation rate was 1%. In March 2019, it leaped to 27% as buyers walked away from their deposits. Interestingly, none of these housing market woes are becoming election issues, so far at least. The US Treasury 10-year yield is now at 2.54%, and that's up 4 basis points from yesterday. Gold is down $7 from yesterday's at $1,279 an ounce, and US oil prices a little changed today, now just on $63.50 a barrel, while the Brent benchmark is on $72 a barrel. And the Kiwi dollar will open today marginally firmer at 66.7 US cents. On the cross rates, we're now at 94.5 Aussie cents, a small dip on the day, and against the euro, we're little changed at 59.6 euro cents. That leaves the TWI at 71.6. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.